So listen, let's talk about I think Amazon is one of your favorite names right now. This whole theme is one of your favorites. So explain a little bit where you see the opportunity here.
Well, so, you've heard this ad nauseum, but the consumer is in fabulous shape. It's not just the transfer payments, but it's also the balance sheet. And that has been happening over the last 10, 15 years, where debt's been paid down by the consumer and asset prices obviously are up, housing as well. So we think the spending boom continues, and we may see a slight shift from goods to services, but goods are not going away. And so Amazon's a stock that sort of straddles e-commerce and some physical shopping. You saw today from Walmart what being in both spaces can do up against really difficult comps. Beat the numbers, raise guidance. E-commerce continues to thrive there as well. So we actually like both these names, but we've been adding to Amazon. It's done nothing for almost a year, since late summer anyway. And so this is a stock on a valuation basis that is compelling. They've borrowed a lot of money at very low rates, and they've raised expectations for free cash flow.
Quick question before we move away from Amazon. What would you think as a shareholder about their possible investment in MGM, especially the price that they're rumored to be paying, which is pretty steep?
Well, yes, it is steep, but this is a company with a ton of cash, and I think they'd rather buy MGM than pay a dividend, though as a shareholder, I'd rather they pay a dividend. So they needed to make a big acquisition. It would lower the cost of content for them. And I find it super intriguing, especially in light of the AT&T Discovery deal. So I think they're on the right track. This is what Jeff Bezos, I believe, freed himself up to do, be strategic and thoughtful. And we know that he likes this space, and we know that streaming is going to continue to be a compelling part of most people's entertainment budget.
It's interesting you say you'd rather have them pay a dividend. Why is that? Because presumably they think they can invest those cash flows internally at much higher rates than whatever they might be able to pay out. And it's not tax efficient, especially these days, right?
Exactly right. I think that one of my big worries about the market is the potential policy mistakes we may see out of D.C. And that is not just dividend or income taxes going up, which will raise the tax on dividends, but capital gains taxes going up to almost usurious levels, if you ask me.
Right. So that being the case, why would you want Amazon to pay a dividend?
Oh, I'm sorry. I misunderstood you, Kelly. Yeah, well, as an investor, I mean, many investors live off the income in their portfolios. So if you get a dividend and dividend growth, think of Apple. I mean, there was a time in 2013-14 when they were yielding above the 10-year, and the 10-year was yielding in the almost 3% level range. So as for retail investors, dividends, if there's enough cash flow, are better and more sustainable than share buybacks, though I'm not opposed to share buybacks. But I think just for individuals who are investing in the stock, it's a way to get some of your return up front.
Shepard Smith here. Thanks for watching CNBC on YouTube.